Welcome back everyone. So having looked at the continuation and reversal patterns, we now need to look at the individual patterns that we find. So the first one that we are going to look at, just move this. So the first one we have is what is called the double bottom, which is a bullish reversal pattern. So we're expecting to find this at the bottom of a downtrend. So you have price coming from this direction downwards. Then it hits a point of support, then it moves upwards. It turns again towards that support and it moves upwards again. So usually these are quite common to find. If they don't happen, it can be that the buying is so much that the price doesn't even come back to take another test of the support that it hit the first time. It will just shoot straight upwards. So ideally, you consider entry at the point that the price breaks the upper point of the middle level of the double bottom formation. So this inner triangle, you project it, or you project the top of that line towards this direction. Then when price moves above that line, then you would consider it as confirmation, and the price target that you would be looking at is the same as measured from a line that is drawn on the support of the two bottoms to the apex of the inner triangle. Then that same range of price is projected above the breaking point. And when you project it upwards, that would be your profit target. So this would be your entry point. Then you hold until it reaches this point. You have reached your profit level, and if you want, you can sell. Usually what I recommend is that if you see a pattern at this point here that looks like a good reversal pattern, probably maybe there is a hammer, or maybe there is a piercing pattern, or maybe a bullish engulfing, you can buy probably maybe 50% of your target. If price comes to this point and turns, then if you want, you can maybe sell to get the profit of this level. Then as price comes down, you're waiting for it to reach some point of confirmation. When it turns, you can buy again 50%. On confirmation, if you want, you can add to whatever you have bought. Then when it reaches this point, you can sell maybe 60 to 50%. Then see how price will progress to the upwards direction. This way you would have managed to take out your capital, and whatever remains for growth is something that you can say, I'm leaving it to grow in the medium to long term, because you have now taken your capital and you're now deploying it into another share or maybe opportunity that is coming up. Then the next one we'll look at is the double top, which is a bearish formation. So here you're looking for a share that is in an uptrend, reaches a resistance level, then price turns backwards, then it reaches a point in the middle where it turns again to go to the upside. Then it retests the same price level it had reached in the first instance. Then the price moves downward. So your target entry, if you are a trader, is when price breaks a line that is formed from the triangle or the inner triangle and drawn to the right. When it breaks that level, then that's good confirmation for you to enter. Then price will run the same distance from this point all the way to the bottom of the inner triangle. You would project it downwards to determine your profit target. Like we said, for the double bottom, you can also trade it using the reversal patterns that we have learned for candles. You can use this for an entry if you have got maybe a hanging man, or you've got dark cloud cover, or you've got bearish engulfing. When you reach this point, you can take some or all of the profit. Then when price moves upwards again, you are looking at the next formation. Then when price comes down again, you can add at this point. So when you are trading a double top formation, you are actually entering into what is called a short trade. This is usually for traders. If you are an investor and you see a double top, then usually when it reaches this point, you should know that price is probably confirming a double top. Or you can wait until this point for you to sell some of the position that you have. But usually I recommend selling when you've got a pattern at the top here. When the confirmation comes, you're probably looking to enter a short trade so you can benefit from price moving upwards and you benefit from price moving downwards. So that's all for the two, a double bottom and a double top formation. You can open your charts and you look for these types of formation and see if they were confirmed for the price target that was set. And usually we also want to see how far they ran even after the price target had been reached. Thank you, and we look forward to the next lesson.